Bitcoin right now is pumping towards the upside, and we're seeing oil start to move towards the downside after it started to move towards the upside during market open. It's now actually reversing that move and actually filling the gap. And of course, we're seeing the S&P move towards the upside, and Nasdaq also, off of the back of some news that we've just had coming in, which I'm going to be covering in a second. But of course, we've had a lot of different updates and developments in the market that I need to be going through, and have a lot of different charts. And of course, we need to be talking about this chart in specific, since we have liquidity piling up on both sides for Bitcoin. So we need to be talking about if there's going to be a false move in the market and what's the most likely direction Bitcoin is likely to be heading going forward. And of course, we have a busy week ahead of us. We're on day 44 of this US versus Iran conflict, and of course we're seeing that we're going to be having a lot of headlines continuing to come in, as we have had over the past 48 hours, causing prices to be moving towards the upside and the downside across the board. And of course, on Tuesday we have our PPI and our core PPI readings coming out, and we have Fed speakers potentially speaking on Tuesday. And of course, we do have Fed speakers speaking throughout the week additionally. And of course, Wednesday we have our crude oil inventories data coming out. Then Thursday we have jobless claims, and of course our Philly Fed, which is a manufacturing index data that's going to be coming on Thursday. So of course, there's going to be a lot of volatility on the table. So with that being said, we can get straight away in towards the news for the week. And of course, you can see that we had Brent oil and crude oil as well actually surging towards the upside, upwards of about 8% on market open. As you can see by this chart over here, you can see that of course we had a massive uptick, and we had crude oil actually moving towards the upside aggressively. And this actually was due to, of course, we had ultimatums from Trump and statements from JD Vance, due to the fact that the US and Iran failed to reach an agreement in terms of a ceasefire. So of course, this caused a lot of volatility in the market open, and we actually initially saw a surge towards the upside. And of course, you can see here that in theory, markets were likely supposed to be dropping, mentioned by Peter Schiff here, due to the fact that we didn't get a ceasefire. Theoretically, we should have had a drop in risk assets, but of course, it's likely that traders actually price in the probability that Trump is going to be actually reassuring us later on this week. So of course, we did have initially a drop in markets, and of course we had a surge in the oil prices, but that started to actually reverse, and we're starting to see things being priced in differently. So of course, we've had updates from Trump regarding Iranian exports, and of course Trump has actually enforced a blockade of the exports from the Hamas. And of course, right now that's actually going to be causing a supply shortage, since of course you can see that a blockade actually cuts off about 1.5 to 1.7 million barrels of Iranian exports. And of course, that's on top of the 10 million plus that's already offline. So this doesn't just obviously include oil. This includes exports of fertilizers, packaging, and fabric supply chains that run through Hamas. And of course, this means that this is not only going to be an energy shock, it's also going to be a shock for some raw materials. So looking at what the professional analysts, so Bloomberg economic scenarios, actually are pricing in based on the data that we do have and some of the updates, the base case is that oil is likely to be trading at $105 per barrel in Q2. And of course, we're going to be having inflation at 4.2% by Q4. And this is well above the Fed's 2% target, which again has implications of interest rate cuts. And we can look at our probabilities, and we can see already that the probability of the market pricing in an interest rate cut is quite low, and it's likely for the rest of 2026 at least we're not going to be seeing a rate cut. We're going to be seeing the rate held at 3.5 to 3.75 basis points. So of course, that is what is going on in terms of the interest rates and of course inflation. And looking at the worst case scenario is that oil is going to be trading at 170 per barrel, which is well above where we are right now, which indicates that inflation is going to get a lot worse, which is going to be at 5.4%, and we're going to be having GDP growth actually decrease at 2.2%, which is going to have stagflationary implications over there, which is a lot worse than what is currently happening. So this may actually be the case of the war actually taking a turn for the worse, and of course we're going to be seeing that actually reflecting prices. So you can look at this chart by bar chart, and you can see that the Strait of Hormuz traffic has absolutely plummeted. So of course this has actually led to prices in terms of the CPI reading actually starting to tick towards the upside, which is a concerning thing to be seeing. And you can see that the forecast right now is about 3.4% for the next reading, and previously it was up 2.4%, and right now it's jumped to 3.3%, which has actually been, I think, the highest since about June of 2024. So that's one thing to actually bear in mind, how big of an increase this is now. So of course, this is something that the Fed is going to be monitoring closely before making any decisions in terms of an interest rate cut. And of course, we can look at the GDP that's actually come towards the downside also, which actually implicates some stagflation that potentially is bringing into question. And of course, that can lead in towards the conversation of a recession that's potentially going to be playing out if we're going to be seeing inflation continue to move towards the upside. We're seeing jobless claims increase potentially, and we're seeing the GDP remain relatively low. So of course, this is something that the Fed are going to be keeping an eye on in terms of what's going to be happening with the interest rate. And of course, we need to be seeing that this ceasefire potentially is going to be coming into play, where inflation can maybe turn back towards the downside again if we get that ceasefire agreement. But of course, speaking about the ceasefire probabilities, you can see that it's not likely we're going to be getting that anytime soon, since negotiations still need to be taking place. We still need to be having negotiations on both parties, and they both need to agree to specific terms before this actually happens. So the probability of a permanent peace deal is at 43% for June 30th and about 15% for April 22nd. So that kind of gives a picture of what the market is pricing right now, as you can see on Polymarket. And of course, we can look at this tweet over here, and you can see that historically, looking at this data that's been taken from research on war termination, and of course data sourced from conflict resolutions, as you can see on the bottom there, there's about 3 to 11 distinct peace talks that actually need to take place before there's actually any kind of progress in terms of a ceasefire and a peace agreement. And of course, you can see that there's about 11 to 15 smaller deals along the way, and of course it takes about 2 to 3 ceasefire attempts before it actually becomes successful. So of course, JD Vance announced the failed peace talk, and this is just the first try. So of course, this actually is not something we haven't seen before, and it's likely that, you know, if you're talking about negotiating and you know anything about negotiating tactics, it's likely that on the first set of talks, nothing will really happen. The needle wouldn't really move. But of course, the more talks that they do have and the more terms that they both agree on slowly, then of course, eventually we're going to be coming towards a ceasefire, and we're going to be having peace across the board, which is going to lead to prices actually coming down for oil. And of course, this is going to lead to markets actually seeing some sort of relief. So here's the tweet on Truth Social that Trump actually posted about the blockade actually happening. And of course, you can see that the S&P 500 actually erased all losses on the day, since of course the US actually begins its blockade. And you can see right there that this has led to the DXY on the daily time frame on the right hand side of the screen actually coming towards the downside. So this is the US dollar index, and of course we're seeing that we're on major resistance on a monthly time frame, and until we can actually break above this resistance and hold, then I do think that the US dollar is going to remain weak. But on the daily, we are testing this trend line, and it is possible that we can see some relief for the DXY, which is going to lead to markets coming towards the downside. So this is something I'm going to be keeping an eye on and updating you guys on regularly. But as of now, the DXY is still very weak, and we're seeing that the US dollar is not actually gaining strength so far on the lower time frames. And of course, we are at significant resistance on a monthly. So until that changes, then of course we are not going to be seeing prices actually come towards the downside in terms of risk assets. So of course, we can see the S&P now is less than 3% away from all-time highs. It's actually pumping towards the upside, and we've actually recovered all of the downside we've experienced since this conflicts actually come into the picture. And we can see right now that, of course, although we had a rounded on top, we're creeping ever so slightly in towards the all-time high price. And of course, if the S&P actually makes all-time highs and continues higher, then of course the picture changes and the trend is a trend to the end of the trend. So there's likely that Bitcoin could follow, and we could see a broader relief rally for Bitcoin. But of course, I'm going to be talking about this in more detail and what I do expect for the up and coming weeks for Bitcoin. So like mentioned on the start of the video, we have liquidity piling up on both sides for Bitcoin. So this is one thing that we need to be watching for, and what we need to be actually monitoring to see where Bitcoin is likely to actually grab the liquidity and actually head towards, because Bitcoin always moves to the majority of the liquidity, and of course it's closer towards the top side of the liquidity right now. So my bias in the short term is that we are going to be moving towards the upside, towards $75,000 where the liquidity resides. So that's one thing to be bearing in mind. And of course we can see that we did have a CME gap at 73,000. So I did post this on Twitter when we were all the way down here, and like I mentioned in the videos, we do tend to actually fill the CME gap quite quickly once we do make the CME gap. So this is one thing that you could have seen and taken advantage of, since we're already moving towards the CME close price, as you can see, at 73,000. So it is likely we do fill this eventually, and once that does happen, it may actually lead to more short squeezes, as we do have liquidity on the top side, which can lead to Bitcoin actually moving towards the upside even further. And of course we can see that we do have a downsloping trend line, and if we do start to break out of this trend line, it is possible that we can actually move towards the top side. But again, I do think that we are not going to be seeing a major continuation, and I'll get onto why in a second. I do think that we could see a fake out of the trend line and then a move further down, since of course we are still seeing that we haven't actually got a peace agreement, and we're likely going to be getting different headlines and we're likely going to be getting different updates in terms of this war that could be negative for risk assets, and it could cause us to come towards the downside. And of course we can look at price action to tell us if this is likely to happen. But of course on a higher time frame, we're still on major support for Bitcoin. So of course, until we lose the support, it is possible that we can continue to chop in a range. And of course, if you look at this chart over here, one reason that I am expecting in the up and coming weeks further downside is the fact that we have the Bank of Japan rate decision. And of course, every time that the Bank of Japan has actually hiked interest rates in the past, we can see by this chart that Bitcoin has moved towards the downside. So it's possible that this trend actually persists. If the Bank of Japan actually hike interest rates, we could see Bitcoin move towards the downside also again. But of course, we are in our trading range for Bitcoin, and every time we actually grab the liquidity towards the top side of the trading range and come back inside the trading range, we tend to actually trade towards the range lows. Like you can see, that's happened in our previous trading ranges. Every time we grab the top side liquidity, we trade towards the range lows, and of course if we grab the downside liquidity, we tend to trade towards the range highs. So of course I don't expect this trend to actually change for Bitcoin. I do think that if we do grab the top side liquidity here and we come back inside, I do think it's likely we trade to the range lows at least, and potentially we're going to be seeing some follow through. And of course, if you look at the market maker sell model, like I've highlighted at the top, you can go back on my previous videos. I did talk about the market maker sell model up here, and it's playing out perfectly, and we're in our last range before we get some accumulation. So I do think that of course if we break towards the downside and we lose our low in and around the $62,000 level, I do think we are going to be seeing 50s for Bitcoin, 50,000s, and we're going to be seeing further price action towards the downside. So of course the market maker sell model is another reason. I do think that we could get a liquidity grab towards the top side and we can move further towards the downside. And of course, if I zoom in towards this range a bit more to get a clearer picture of what's happening in that shorter time frame, you can of course see that we are in some sort of upward sloping parallel channel if you look at the dotted lines. So it's likely that if we actually break above our range highs, so if you look at the bold horizontal white line and we actually come in towards this order block over here, so you can see this clear sort of supply zone over here that's previously been some sort of a consolidation on the lower time frames before our major move towards the downside. I do think that if we start to see impulses down and we come back in towards the range again after deviating the highs and actually testing this parallel channel top, as you can see by the dotted line, then I do think that that's going to be a major signal that Bitcoin is ready to trade towards the range lows again. And of course we do have a bear flag actually playing out where we had our previous move towards the downside. We've come in towards the channel, and if we start to see us lose that mid-range and the upward sloping parallel channel support line, it's possible we are going to be trading towards the range lows and even lower. So of course the signal for me is going to be if we actually trade towards the top side, we test the parallel channel top in towards this supply zone over here or order block, and we actually come back inside the range, I do think that that's going to be a signal that we are going to be moving lower for Bitcoin. And of course, we are going to be grabbing all the topside liquidity if that does happen. So that's going to be a telling signal, since we have downside liquidity already piling up, and it's going to get even larger as Bitcoin moves towards the top side and grabs the top side liquidity. And I do think that that's going to be a telling signal that we're going to be moving further down if that happens. So make sure to be staying subscribed, make sure you like the video, and make sure that those two are actually done, since of course the algorithm will recommend my videos in the future to you, and of course you will get notified when I do upload. So I will be covering that scenario if it does play out on my channel again. But looking at the EMA ribbons, you can see that the trends is still towards the downside. You can look at the 12-25 moving averages, they are angled towards the downside. Your Gaussian channel on the weekly time frame also is still red. You still also have your 50-week moving average and your 50-week exponential moving average still angled towards the downside, and we haven't reclaimed it. So of course it's likely we're still in this bear market. So of course I do still think that we are going to be seeing lower prices. You can see your 21-week exponential moving average also is going to be providing resistance in the case that we actually move towards the top side, and that could be a great level that we could be watching for that liquidity grab scenario before we continue towards the downside again. As you can see, last cycle we capped price all the way towards the downside, and once we reclaimed it, that was the start of the bull market. So of course this is a key moving average to be keeping an eye on. But again, the EMA ribbons, which is the main one I'll be looking at, is still red and angled towards the downside. So of course this is going to continue to expand, and potentially we're going to be seeing Bitcoin move towards the downside. And until we can reclaim the EMAs, that's when I'm going to be entertaining the idea of a Bitcoin bottom, and of course a bull market actually commencing again. And again, the MACD is still bearish on the monthly time frame, like I highlighted all the way at the top. You can go back on my thumbnails previously. I was talking about the moving average, I was talking about the MACD flipping bearish, and I was saying that the next couple of months we're going to be seeing momentum towards the downside, and that's played out perfectly. So I do expect us to continue to see that until we start to see the MACD lose exhaustion and momentum towards the downside. And then that's where we're going to be seeing, of course, accumulation, and we can entertain a day of a bottom. But right now we're at the peak stages where we are expecting one more violent move down before the MACD suggests that we can potentially see a Bitcoin bottom actually confirm. And of course the bottom target still remain the 300-week and the 350-week moving average, and of course you have the 200-week moving average you want to see tagged. But previously in every cycle we've at least hit the 300-week moving average, and in 2022 we hit the 350-week moving average. So of course my target is going to be around that $52,000 to about $46,000 mark where the moving averages reside, and of course that's where we're going to be expecting a Bitcoin bottom. And of course for Ethereum we're going to be expecting the same thing as Bitcoin. If we actually lose our parallel channel and we come towards the downside, we're expecting the lower support targets to be met, and of course these are going to be great opportunities to buy in for the long term. So I do think that Ethereum is going to be correlated to Bitcoin still, and if Bitcoin is bullish, Ethereum will be bullish, and it may see a further rally potentially in towards the fair value gap here, and then we're going to be moving towards the downside again. And then once we do hit our bottom targets and support levels, then we can actually entertain the idea of a bottom, and we can talk about if we're seeing the right signals to be actually calling for that. But yeah, that'll be it for me. Make sure to follow me on X to be staying up to date with all my updates, and I'll be seeing you guys in the next one. Have a blessed rest of your day. Peace guys, see ya, bye bye.